Yes guys, so back with another video, and yeah, today didn't go as planned again. Some very few minor mistakes that I did, so easily corrected and can easily be brought back to that quality which we need to be able to trade in that precision. So yeah, I'm gonna show you through the trade and show you what happened. First of all, what I'm gonna do is I'm gonna grab my pre-market plan here. We had a large distribution at 8:30, so things I was looking for is I either wanted accumulation inside this range here of the projections, or I wanted a retracement back into this region there of equilibrium of this price swing there. So from this swing low to the swing high, which did eventually form in and around that region. However, the one thing that I failed to do today was take into account the context of the day of the week, which is Friday with no high impact news. So I was looking at these targets there just because we got some heavy distribution at 8:30, when really I should have been thinking, okay, the previous session dealt a very large range. Are we going to see that much movement with no high impact news? So these are the things you need to be thinking about. As I said, I failed to take that into consideration during my trading, which means ultimately I had higher expectations for the session, which was a bad thing today. Top down analysis, like I was saying, I wanted to see price work its way up to the previous day high, not necessarily take it, but work its way up to these two highs there. That was mainly because of the reaction here to this daily inversion, which I outlined the other day. I said that price could potentially tap into here to break higher up, which is what happened today. You can see we got that retracement through. So if we just go on the 15-minute, we got the drop off during yesterday's session, and then we also had SMT divergence with ES, which is something you should be looking for. So that was the early sign, and that's why the pre-market trade would have been, you know, a good time to do it. We had this low resistance liquidity there. We had all of these failed swing highs which wanted to be taken where stop losses were. Okay, so it was easy for the market to take. So right here, you know, like I said, we kind of topped out at 925. So the thing I was looking for in particular at the market open was, can we manipulate lower down into an imbalance? So the one I had in mind, so this was obviously the range I was looking at for accumulation. I wanted to see, would we retrace into here or would we accumulate here? And we did end up retracing into this 15-minute fair value gap, and that was the fair value gap of my choice, where I wanted to look for a trade to base my idea off. And that was very simply because we had this swing high here and that swing low from the distribution that we had during the pre-market. So you're looking for a PD array at discounted price levels here, and it was also within this low risk buy area, which is what happened there. So that was why I tagged this 15-minute fair value gap and not these two. If we were to get a reaction off these or even one of those imbalances there, then you could argue that the market is extremely strong. And then also we had the formation of this fair value gap there on the hourly when the hourly candle did close at 3 o'clock. So with that in mind, I was looking for a reaction here. If we go on the 1 minute, what did we have here? We had a very obvious low, and what actually did happen is ES managed to take that low and Nasdaq failed to take it. Also, we had minor SMT divergence between these lows. Like I've stated before, that is always something you should be looking out for, SMT divergence. But the main factor was we had this obvious PD array there. Okay, so what did we have here? I said from the beginning, 9:30, we could see an aggressive retracement down. It wasn't majorly aggressive. We did retrace down and it kind of chopped in and about a bit, which suggested to me that the retracement period wasn't finished and that we were going to dip back into this 15-minute FVG. And that is the importance of looking for this SMT divergence, because you can highlight when you're going to see that reversal. And that's why I wasn't bothered about, you know, these inversions there, because I always felt like we would take a deeper hunt into that liquidity, and especially with the hourly fair value gap forming as well at that time. It was always a big draw on liquidity on market conditions like this, which are more choppy. Friday, choppy price action here. Are we going to see big distribution now? Probably not, because it would have happened earlier in the silver bullet session. But what can you expect? Spoke about this yesterday. You can expect to run on stops during the lunch session macro period. Right, very important. With that in mind, what did we have? We had a change in the state of delivery here on the 1 minute, right there. And then we also had 1 minute FVG. So that was the first sign that the market is now ready. You know, order flow has shifted. So at the bare minimum, we're going to be taking some sell stops or some buy stops even. What was I looking for then? I was looking for this inversion fair value gap. So what did I do? So wait patiently throughout this chop again. Wanted to execute on roughly the macro period, which is 10 to 11 to 10 past 11, roughly within around that price. What did I do? I entered too early. So I actually entered, you can see where I entered here. It was on this order block there. And I wouldn't necessarily say it was a bad entry, but what I would say is during the macro period, what do you expect? Probably a hunt on some stops first, and that's what happened there. So we dipped back into this inversion, and then we eventually went up. There were 2 points where I should have entered for me. This was an opportunity there, but I can understand why I didn't do it, mainly because I wanted to see more confirmation. As soon as this happened there, in my opinion, I could have entered off here right away. As soon as price broke up above this up close wick, then as soon as it dips back into it, that there is where I should be entering. And you can kind of see here, if I just get encroachment, you can see how it dipped into 50% of this wick. As soon as we surpass that level, you can probably expect we're going to take out that high at the very minimum. And that's really thinking about in a short-term sense, but the highs work the same way as they would on a normal graph. So you can see here in the 15 second, I don't use the 15 second, but you can see how it works. Obviously I had that fair value gap there, and then we had this high, which was the wick that price is hunting, and then you can see how it works there. You've got kind of your accumulation period on a shorter time frame, which was during the macro period. That is when we eventually got that price run. With that in mind, when should I have entered? Nothing wrong with this in particular. I did get the order block entry, but my stop was too tight. I can't be having my stop in and about here, so I did end up losing about $600 on my funded today. Not my actual funders, but the evals. As I said, I'm still trying to progress on the evaluation first before I can take that step back to my funded accounts. I want to see some more consistency first. Definitely following more rules. That's extremely important for me. I should have waited for this, and then I could have always entered off a change in the state of delivery off this inversion reaction, which could have been this set of candles there. So you got these sets of down close candles there. That is what I would now use as a change in the state of delivery or order block. So here, paired with this fair value gap, that is the one I should have entered, but it's too late. I can't get back in the trade now. And then you can see how price eventually did run up. From here, my take profit wasn't actually here because of the market conditions. I did learn from the previous session, so I was actually targeting this imbalance there because it was very clear. It was the first fair value gap of the day, so I was targeting consequent encroachment off that point there, and you can see it did actually get hit. So it would have been a nice trade if I'd entered, where I should have been, and just been a little bit more patient, waiting for that macro period before executing. Said before, when there's no high impact news, you want to be prioritizing macro period entries. At least do it, within those half an hour periods, not necessarily the 20 minutes, but you can do it 5 minutes before. But I went too early here. It was too early. It was, still in the middle of this accumulation phase there. There wasn't actually certainty that we were going to come to this imbalance there. But what we can expect is a run to some type of liquidity during that macro period. So that was the trade I should have taken. As I said, you would have ended up getting the entry here. You could have entered on the fair value gap, and then you would have targeted encroachment there, and then very nicely stopped there. So that would have been a nice 3.4 to 1 where I ended up entering, which would have been there, putting my stop literally, kid you not, there, which again was very stupid because I should have been expecting the stop hunt, but because we've already had a reaction off this inversion, I didn't want to see price go back to it, which shows that we're in a accumulation phase, which is what it was, like I was alluding to on that 15-second chart. You can kind of see it a bit more clear. And then again, my target was there as well, so very similar RR event in the end, but that was the entry I should have taken. Yeah, that's basically a recap. And then, as you can see, price did eventually take the high of the day, which was set out just before in pre-market. No, it didn't. I'm lying. It took out this little high there, but it didn't actually take out the high of the day, so that will be my target going into next week. It just eventually came back into this range. That is basically the trade. I mean, very honest reaction from me. Could have been better? Yes. Was my entry the worst? No. Would it have worked under different conditions? Yeah, probably would. But you always have to take into context the market and what day it is, the type of price action we've had prior to the session, and the type of day it is. Is there any high impact news? So that is why I should have followed my flow chart. That is basically it today. That is it. But hopefully it kind of gave you an insight into the things you should be looking for and being aware of when you're trading, making sure you keep that in your mind. Very important. Otherwise you'll forget to follow your rules, and you may be on the back of a losing trade. It's still a loss at the end of the day, even though maybe I did do the right things and I tried to do my plan. The way I see it, if I have a tight stop loss, then I need a more precise entry. If I had a bigger stop loss, then my entry doesn't need to be as precise, and that all comes down to risk. Always, when we have choppy conditions, look at the 5-minute chart, don't look at the 1 minute. I got locked in to looking at the 1 minute, when in chopper conditions you want to be prioritizing entries off the 5-15 minute time frame, and then leave the 1 minute to the conditions which are more favorable, because the higher probability today wasn't as high probability, but the trade would have planned out if I'd looked at the 5 minute for entries, not just analysis. So yeah, that is it. Cheers for listening. And yeah, also another thing, I will be putting a Discord soon. I'm going to be getting that together. So yeah, it'd be good if you guys could join the Discord, and then we could share things, and it's a good place to grow and share ideas, encourage each other and stay motivated. So yeah, that should come very shortly next week. So yeah, take it easy and catch you next time.